Hello once again, and welcome to the real estate edition of That Business Show 2.0 with your host, Jamie Maloney, where real estate becomes a show business. Every Thursday now at 9 a.m. Eastern Standard Time, available on That Business Network with new episodes and available on iTunes and on YouTube. And please subscribe to us. It helps the show grow, and be sure to leave a review. If you're finding the show on the air for the first time or on iTunes or on YouTube, just a quick background about myself. Based in Tampa Bay, a real estate agent for over 10 years now. I've specialized in the sale of bank-owned properties, but I can help anybody with any type of real estate in the state of Florida, from buying a home to selling a home, and from bank-owned properties to investment properties and commercial real estate, which is the direction my business is starting to go off into as REOs begin to decline somewhat in our market. On today's show, we're going to talk about what's going on in the market statistically. Once a month, I do a report on what's going on in Hillsborough, Pinellas, and Pasco, and also Polk counties statistically. So we're going to look at what's available in terms of inventory and different price points. We're going to see how much inventory is on the market in terms of months of supply, how much of that inventory is distressed, how much of it is short sale, or I should say foreclosures. And as you've seen on the program or heard on the program a number of times, we're in a very undersupplied market. But before I get to that, I want to talk about what's on the horizon. I've been talking, on this program that now is the time to sell your home. We got record low inventory, and we got, record low interest rates. And at this time, now is a seller's market. Multiple offers coming in on a lot of properties. And now has been probably the best time to sell your home since 2004 and 2005, which are the peaks of the real estate market in Tampa Bay. And mostly speaking overall, that was the peak of the market. 2006 was when somebody switched the lights off on real estate, and it seemed to happen almost overnight. We went from a hypermarket of sorts to a crash. Basically, it was a stall while people were still buying and stuff wasn't selling. And then the property values began to decrease because the supply was through the roof. And I can remember that was about when I started in real estate. I started at the worst possible time. In 2006. Didn't do a lot of business that year as I was finishing up my return to college at USF, where I got a finance degree. In 2007, though, that was when I began to actually work full-time in real estate and found the bank-owned property business. But I can remember in 2007, and I was working around so many real estate agents that were experienced in the business, but they had never been through a lot of different market cycles. And so I can remember at a lot of the meetings, the question of what was a short sale was still a commonly asked question from the agents to the brokers and to other agents, who had to explain to them a short sale is a property in which a owner owes more on the property than what it's worth, and to sell the property, you're going to have to get a lien release from the bank, and it's not a fun process and can take months to even years, and that's even if it even gets approved. 2008, the financial crisis hits, and if it hadn't been for the government bailout, the crisis would have been much more severe than what it was. And if you haven't watched the movie The Big Short, highly recommend that movie. That movie really breaks down a lot of what happened during the financial crisis. It's has almost everything to do with what was going on in the mortgage industry. And it takes it all the way back to the very beginning of the movie. Sometime in the 1970s, a guy came up with the idea of mortgage-backed securities, and that's the first scene in the movie. It's only for like a minute or so, but it was a great idea because nobody defaults on their mortgage on their home. So let's take all these mortgages and let's securitize them into mortgage-backed securities, and then we can sell those onto Wall Street as income-producing streams for investors, because again, nobody defaults on mortgages. And those things took off, and with the deregulation of the markets in the 1990s and in the early 2000s, that the appetite for those types of investments went through the roof, and so they began to lower their standards to get more and more mortgages out onto the marketplace, and that is what led to the hypermarkets in 2003 to 4 in 2005, and ultimately to the decline in 2008, because the mortgage-backed securities became essentially worthless because they were giving loans to people that were no longer putting ample amounts of money into their homes. There was no more down payments going into the home. There was nothing, that people weren't putting skin into the game. Traditional mortgages, people put 10 to 20% down, and then it was also a cultural thing that your home was your castle, and that was going to lead you into retirement. But that went away in the late 1990s and in early 2000s. Homes were no longer treated as, the American dreams. They were treated as investments and cash machines, and you moved into one and then you moved out of one, and there was no longer any shame in losing a home to foreclosure. And so that cultural shift, combined with the lowering of the standards to get a mortgage, all led to that financial crisis. And it all began with the issuance and the development of mortgage-backed securities, something that's still out there. I mean, there's nothing wrong with mortgage-backed securities when they're properly implemented. The problem began when the mortgages were being issued to people who could no longer, had no skin in the game, had no credit worthiness, and would lead to tremendous amounts of defaults. And the movie really takes people through what happened. It breaks it down because they use a lot of financial terms, and then they simplify it through everyday understandings of things. And then when they get into the idea of the tranches and things like that, they show through things like gambling and how basically investors were nothing more than gamblers in the real estate market. And so it's a fascinating movie, and there are signs of it happening again. I do a lot of reading and a lot of research on this stuff right here. And right now, we're seeing a return to some of the practices that we saw in 2005 and 2006. Right now, AIG has begun to lay the groundwork for a jumbo loan securitization. That was one of the precursors to the financial crisis, or I should say the run-up in housing that led to a lot of the defaults. And then it became a point where you couldn't get any jumbo loans on a property, and so the high-end properties really began to crash because, and again, a jumbo loan is anything over like $500,000. I think it's market to market. I'm not a loan officer; it's not one of my specialties. But the ability to get financing on high-end properties, those began to crash. But now the jumbo loans are becoming back into the marketplace. That was one of the precursors to the crisis in 2008. Loan defects are up this past year. Loan defects and loan defaults are up. Real estate refis or defaults have increased as new loans have lower credit scores. That's another thing that was a precursor to the crash in 2006, 2007, was the lowering of standards, and we're seeing that once again. Subprime is back into the marketplace. Remember what subprime was? That was basically giving money to people that weren't qualified, and there are loans out there for the stated loan products are out there again, and I've even been offered that product and a stated loan for myself. And a stated loan is just tell us what you make, and we'll take your word for it, and we'll give you a loan. And so right now the offer is 10% of stated assets, and it's designed for people that have a business, who write off all of their income, so they don't have to pay a lot of taxes, but they really do have assets. And if you're not reporting any type of income, then to a bank, you're not making any money. And I've talked about that on the program with other tax professionals. How do you balance those two things? Do you want to show that your business is making lots and lots of money so you can pay lots and lots of taxes, or do you want to implement a lot of tax saving strategies so your company looks like it doesn't make any money? And the trade-off to that is that you can't get a mortgage on property when you're only reporting a $20,000 a year income, when you've really got a couple $100,000 or more sitting in a bank. And so stated loan products will take a percentage of your stated assets and then give you a loan based on that. And I was recently offered 10% of my stated assets. But the bottom line is I don't want to go out there and make things up and lie. I think the only thing they do is pull credit. This is what you say that you've gotten, and then here's your loan. It's a return to 2006. And so if you're right now in the market to sell your home sometime in the next year, you definitely want to consider doing that, because some of the factors that led to the financial crisis are starting to show their head again. That combined with the investors that bought so much of the homes in 2012, I've said on this program a number of times, they are going to begin to release that inventory in 2019 and 2020, maybe even earlier, if some of the economic factors begin to rear their head, which is what they are beginning to do right now. And that's going to flood the market with inventory. And so the values of the homes are going to begin to go back down, or at least stabilize. And then you have the interest rate factor. Interest rates have nowhere to go but up. And so when interest rates go up, the values of the homes have to go down because the buying power of the individual borrower decreases. And so all those factors is coming into effect with what's on the horizon, and as why now is a good time to sell your home. If you're in Tampa Bay, I can help you with that. Jamie at tampabayradio.com is my email address. That homevaluation.com will get you a free home valuation on your property. And if you're listening to me anywhere across the United States, still use that homevaluation.com to get in touch with me. We do have a vast number of agents in our relocation and our referral network that I can put you in a connection with. And so please reach out to us. Coldwell Banker, a full service brokerage offering service to homeowners since 1900 or so, over 100 years of brand building behind this brand, and it's a internationally recognized brand with a ton of different tools and great agents to help get your home sold. So I don't want to go too much into the promotions, but again, please consider me your resource for buying or selling homes wherever it is that you are in the United States. When we come back from the break, I'm going to talk a little bit more about this correction, a few more facts and figures I want to throw out to you, and then we'll begin to talk about what's going on statistically in the markets in Hillsborough, Pinellas, Pasco, and also Polk counties. On the Real Estate Edition of That Business Show 2.0 with your host, Jamie Maloney, where real estate becomes show business.
Hi, welcome to Yeager's. We just want to take a minute and show you what we're all about. At Yeager's, our primary business is hardwood flooring, although we are remodelers for kitchen, bath, and general construction. We operate a fleet of shop-at-home vans that have all the flooring type products, hardwood flooring, laminate flooring, tiles, stone, what have you. So we're able to come out first with products in our vehicles and take a look at the setting, how the colors will work, and then to be able to come up with some options and ideas for you. If that's not good enough, we have a large distribution center that we inventory product and have a nice display area.
to the Real Estate Edition of That Business Show 2.0 with your host, Jamie Maloney, where real estate becomes show business. Today, we're talking about the correction that's on the horizon in the real estate market. Right now is a great time to sell your home. Low inventory, low interest rates are fueling a demand from first-time buyers. But if you don't act now, given that you want to sell your home sometime within the next year or two, I'm not saying you need to sell your home just to sell your home. But if you're looking to sell in the next 1 to 2 years, you should consider selling right now, because on the horizon is a lot of inventory from investors that are going to begin to offload their properties into the marketplace, and also the financial crisis that hit in 2007, 2008. Signs of that are beginning to rear their head again, and I was talking about some of the things that are going on in the marketplace that led up to that. We also just learned the FHFA sold over 72,000 non-performing loans. That's $14.2 billion worth of non-performing notes, and with delinquencies on those loans that were between 3.1 and 3.6 years. That and 50% of those assets were in New York, New Jersey, and Florida. That's a good thing for me as an REO broker. That means more inventory in the distressed inventory market, which is where I specialize in. But for the homeowners and the consumers, that's not good news. It means more the inventory that's going to come into the market. It's going to blight neighborhoods and is going to push property values down. That's that shadow inventory that you hear so much about, and you hear different thoughts and different figures and different opinions on out there. There is still a lot of distressed inventory that is out there on the marketplace. It's just that it's been tied up behind the scenes. We just had an administration change, an election last year, and so there was a lot of uncertainty in what's going to happen in the regulatory environment. Now that things are beginning to stabilize economically, whether you like it or not, at least the banks are beginning to know a little bit about what to expect and begin to implement their policies on the disposition of their real estate, as well as other monetary policies. But these loans are $14.2 billion worth, 3.6 years worth of delinquency or average delinquency on these loans. Think about that. That means people have been sitting in these homes for 3 years on average without making payments. And I have seen that personally, going to property and selling foreclosures in Florida. Especially this began to ramp up in 2010 when the robo-signing mess hit. And that was when the banks got their hands slapped for improper foreclosure processes and proceedings. And while it was really based around a bunch of technicalities, it really stalled the foreclosure process and led to the eventual $25 billion settlement across the 5 major banks, Bank of America, Citi, Chase, Wells Fargo, and I forget the other one off the top of my head. But that changed the way that foreclosures were carried out. And right then, they stopped foreclosure. And that was one of the big stall points that I saw in my business as a foreclosure broker, was that robo-signing mess that hit, and that lasted for about 2 years before all of that got cleaned up. But once it did, it began to things began to flow through the pipeline. In Florida, though, the foreclosures were so backlogged, and just the inventory was slowing things down so much, and they began to bring judges out of retirement to begin to work these civil cases. But even now, we're just starting to see, the return to, a low distressed inventory environment. And you'll see here in just a moment when I go to the stats that there's not a lot of distressed inventory on the marketplace. But on the horizon, there's a lot of homes sitting out there that are underwater and that are, people have not been making payments on. Fannie Mae just completed its 10th non-performing loan sale. What does that mean? Fannie Mae is the secondary market. They're the ones who basically add liquidity to the marketplace. If it wasn't for Fannie Mae or Freddie Mac in this last housing downturn, we would have had no loans being made, because there was too much of a risk for banks to make mortgages on a property. Fortunately, Fannie and Freddie were there to soak up the assets and to securitize them for their investors and allow banks to make new loans on properties. But in this new marketplace that we're moving into, we're going to see the major servicers not in the business as much so. So Fannie Mae Freddie Mac, HUD, the VA, they're going to be minor players, and the more major players are going to be the investment groups. A lot more players with smaller portfolios of properties, the investment groups. And so Fannie Mae, like I said, completing its 10th non-performing loan sale. This is all the loans that they have in their portfolio that are not performing. And they, instead of foreclosing on them and selling them through traditional means through the multiple listing service, they are taking them through the pool sale process, and investors are buying these things in one lump sum, and they are basically becoming the servicer. They are the ones who now have the rights to the performance or the non-performance of the note, and then they can sell the notes to somebody else, or they can foreclose, or they can implement some type of workout program with the homeowner. But Fannie Mae, Freddie Mac, HUD, the VA, they're not going to be big players in the marketplace. It's going to go back to the days when real estate agents, I wouldn't say real estate agents, but when there was less regulation in the foreclosure market, and real estate agents sourced their business through servicers by meeting them at local events and through non-traditional means, such as going to a conference and sitting down and meeting them at a bar over a drink or having dinner with them. That's not the way the business works now. That's the way it worked in the old days. Since 2010 and the robo-signing mess hit, the implementation of regulation was much more prevalent, and now real estate agents are picked based on vendor management opinions or scorecards. I shouldn't say opinions, so based on scorecards. And so the personal relationships that people were forming between the asset managers and their agents, which isn't something that should be frowned upon. I mean, if you're a homeowner, you form a personal relationship with your agents or with your insurance provider or with whomever, and you're very comfortable and you know how each other works. That was removed from the marketplace in 2010, and then agents were brought in based and scored upon scorecards, and so the relationship model of assigning assets really changed. But that's going to go back to the relationship model of asset assignment here in this correction. And for all the people out there that wonder how to get foreclosed listings, how do I get those listings? Getting in Fannie Mae, Freddie Mac, HUD, the VA is very, very, very difficult and probably nearly impossible right now. I wouldn't say impossible, but it's almost like winning the lottery if you can get in without prior experience and not through a team or without some type of connection to the people that are decision makers in the business. But with this new marketplace that is on the horizon, you're going to be able to get these types of assets. You're going to need to go to the conferences. You need to go to the REO Max and the Equator events and the Resnet events, because this is where the asset managers go, and then you can then go there and meet these people, and you'll have an in here because there's going to be a lot of people looking for new agents. And so just a change that is coming on the horizon, and for the real estate agents that are out there wondering how to get these properties, some good news for you. As more and more players are going to be in the business, these bigger banks and servicers will be less of a player in the business. Some other things signaling a correction in our financial markets. 40% of new car loans are now subprime. Car inventories are still at an all-time high. Commercial mortgage-backed security late payments are up again. Home equity borrowing is on the rise again. That was a huge precursor to the financial crisis. People that were treating their homes as ATM machines, and so that led to a lot of defaults. But home equity borrowing on the rise again. Underwater homes are increasing again. In our marketplace, we've seen a decline in the availability of properties that are underwater. But as the market stabilizes, as interest rates go back up, as inventory comes on the market, we're going to see values go back down. And then there's a lot of people out there who, if they've come out of being underwater, it's not by a whole lot, so it's easy for the values to dip back down and their homes to go underwater again. And for a lot of people who got into these homes with little and no money down, they have no skin in the game, combined again with the cultural shift that I talked about, in that first segment, that there is no shame in letting your home go to a foreclosure, we're going to see a return to what we saw in this last housing downturn. Mortgage apps jumped last month to a 7-year high. Home ownership rates now at a 50-year low. Well, this is also part of the changing mindset of the millennial, in that they don't see as much a value in purchasing a home in their 20s and living there throughout their entire lives. They see themselves more as going from career to career, moving from place to place, smaller living spaces, which I've talked about on this program a couple of times. Home ownership is the idea of it is really changed from what we grew up with, at least people in Generation X, and going back to the baby boomers experienced. Home ownership today is not really the American dream. The American dream is shifting in the eyes of many people, and this is being led by the millennial generation. And I've talked about that at great lengths on other programs, of course, all available over on thatbusinessnetwork.com and on iTunes. And again, subprime mortgages are making a comeback. A lot of banks or lending institutions are out there looking for subprime loan officers once again. And so we're going to see, again, a decline in the marketplace in the next couple of years. Credit card faults have also dramatically spiked over this past couple of seasons. And so, again, this is all part of the correction that I and many of the industry insiders believe is coming, and now is the time to sell your home if you're considering selling anytime in the next couple of years. Reach out to me, Jamie at TampaBayRadio.com. Use thathomevaluation.com if you'd like to sell your home here in the Tampa Bay region or anywhere across the country through our vast relocation and referral network. Please consider me your resource for real estate, whether it's short sales or foreclosed properties, traditional homes that you own outright, or commercial real estate, which is more and more of my focus each and every day in the real estate business. So again, you're listening to the real estate edition of the program. When we come back from the break, we're going to start going into some of the numbers of what's going on in the Tampa Bay marketplace on the real estate edition of That Business Show 2.0 with your host, Jamie Maloney, where real estate becomes show business.
Hi, welcome to Yeagers. We just want to take a minute and show you what we're all about. At Yeagers, our primary business is hardwood flooring, although we are remodelers for kitchen, bath, and general construction. We operate a fleet of shop-at-home vans that have all the flooring-type products, hardwood flooring, laminate flooring, tiles, stone, what have you. So we're able to come out first with products in our vehicles and take a look at the setting, how the colors will work, and then to be able to come up with some options and ideas for you. If that's not good enough, we have a large distribution center that we inventory product and have a nice display area.
And welcome back to the real estate edition of That Business Show 2.0, where real estate becomes a show business. Find the podcast available on iTunes. We have this as a separate podcast from its parent show, That Business Show 2.0. So if you search for That Business Show 2.0, the real estate edition, you can find just the real estate topics with new episodes coming out each Thursday at 9 a.m. First released on our website at thatbusinessnetwork.com, and then at the end of the week, usually by Friday or Saturday that week, they are released onto iTunes and on YouTube. You can also find them on demand on thatbusinessnetwork.com. On the site, there's a tab that says real estate. Underneath that will be a drop down, and real estate videos is one of the selections on there, and you can watch them from within the website. Please help support the program. Please subscribe to us on iTunes, both the parent show and the real estate edition of the program. It helps the show grow, helps our guests as well as myself get found in the searches on iTunes, and gets us in front of more and more viewers. I think we put out a lot of good content on the program, but it's useless if people can't find it or can't hear it. And iTunes already makes it a difficult process in getting found on that search engine to begin with, as they position shows that haven't released any new content in years, sometimes above regularly producing shows. But that's a topic for another program. Reviews and subscriptions and word of mouth referrals to listen to the program, it's ultimately what will help the program grow. So if you're a listener or a viewer, please do so. And we'd like to also thank you for doing that. So by leaving a review on iTunes, we will put you up on the website under the show supporters tab with a show card and a backlink to your website and a short promotion for your business. And a show appearance is not required, and that's available on thatbusinessnetwork.com. Underneath of resources, click on show supporters, and that's a developing page and a new offer for listeners and supporters of the program for leaving a review on iTunes with a backlink to your site and a promotion. And it's a way of us saying thank you for supporting the program. We're going to talk a little bit about what's going on statistically now in our marketplace. Let's start with Hillsborough County. Let's take a look at the spreadsheet here. So up to $150,000, we got 291 homes available for sale. 1,500 homes roughly have sold in the past 6 months, up to $150,000, and with an average days on market of 38 days. So property's moving pretty quickly. You can still buy in Tampa Bay for under $150,000 and find some decent deals. You can buy investment properties still for $30,000, $40,000, $50,000. You go to other major metros, you're not going to have that luxury. And so a lot of outside investment, a lot of international investment beginning to find the Tampa Bay market, and it'll begin to push these price points up. It's incredible when I look at markets like San Diego or Seattle or Miami, and they don't have that lower end price point like we do. That's what's attractive to Tampa Bay. It's such a small major city. It's a big city with a small town atmosphere. And for all the people out there that are considering a move, Tampa Bay is a great place to move. It's a great place to invest as well. So 1.2 months supply of inventory, though, in this segment. We need inventory, people. If you're looking to sell your home, now's the time to sell, especially with what I said there in that first couple of segments, that there's going to be a return to excessive inventory. There's going to be a return to a more distressed financial environment in the coming years. There's going to be a return to higher interest rates. All that stuff is going to put downward pressure on the acquisition prices of homes. Now is the time to sell. Thathomevaluation.com will get you a free home valuation on a property, and it doesn't matter where you're at, anywhere in the country. We have a vast relocation and referral network of Coldwell Banker agents, and a referral is always the best source of business, especially through a relocation or referral network, because as I've said on the program before, those agents are vetted and those agents are held to a standard of accountability that if they don't perform for you, they can be removed from the network and they lose that referral source in their business. And the agents that are in those networks and getting those leads that are coming through those through that referral source, that's usually the only source of business, or the primary source of business that agent is get. So you have that ability to hold them to accountability when they come through that. So take advantage of that. Reach out to me, thathomevaluation.com. My email address, jamie@tampabayradio.com. Coming back over to the spreadsheet here, price points, again, 150,000 to 300,000. We got 1,765 homes available for sale in the multiple listing service, and homes that have sold in the past 6 months, 150,000 to 300,000, or just over 5,400. That there is the meat of the curve in Hillsborough County. Median price point in the area, roughly 150 to 160,000, but this category on my spreadsheet going up to 300,000. Average days on market 47, and with a months of supply coming in at 1.96, and average days on market very low. Your typical listing agreements oftentimes 180 days, 6 months is what a lot of people advise it takes to sell a property. And you've heard me talk on this program before that it doesn't take 6 months to sell your home unless you are in a unique price point or a unique market. In Tampa Bay, a lot of the homes very conforming to one another, should be moving within the first 30 days. Offers should be rolling in within the first 7 to 14 days. If they are not, and your home is a conforming home to every other home in the neighborhood, your home is overpriced. And there's some past episodes where I go into pricing a home effectively for sale, and how that, if you do not, the price of your home will continually to go down versus what you could have gotten for the home had you listed the property at the right price point in those first 7 to 14 days. Back over here to the spreadsheet, let's move it up to 300,000 to 500,000 price point. 1,248 homes available for sale. Homes that have sold in the last 6 months coming in at just over 1,800 homes, with a average days on market of 62. That is 3.98 months of supply of inventory. And now we're starting to see a shift into a more healthy marketplace. Although in Tampa Bay, the upper price point of homes is not really a driver of the real estate market. $1 million homes are not prevalent in Tampa. A lot of you can get a very nice home for $500,000, $600,000 and be right there in near downtown. You can be on the water for that. Other major metros, you're not going to find homes in the 500,000 price point that give you that type of view or that type of proximity to the downtown, with the size of the home and the amenities that can be included at that price point there. 500,000 to 750,000, we got 464 homes available for sale. 500,000 to 750,000 again have closed in the past 6 months. 527 homes in a month's of supply of inventory, 5.28, and they're staying on market about 77 days on average. And then when we get above 750,000, again, you'll see that begin to trickle down in terms of what's available for sale and what has sold. Altogether, those come in under about 500 or 600 total between the two categories. Tampa Bay, not a huge market for $1 million and up homes, although there are out there and there are considerable amounts of them. But compared to the overall market and compared to other major metros, Tampa Bay not known for $1 million listings. Distressed inventory, these are your short sales and these are your foreclosures. Short sales, only 69 properties available for sale in the multiple listing service. That is such a change from 2010 to 2012 as the market has improved. But again, as I was predicting in that last first half of the segment, financial times are going to change. We're going to see more distressed inventory come onto the marketplace. Talked about how non-performing notes are increasing. Home equity lending is increasing. A lot of things. Defaults are increasing. All the same precursors that led to the financial crisis in 2008 are happening again. Foreclosures available for sale in the multiple listing service coming in at 119. We've seen 211 short sales close in the past 6 months. 510 foreclosures have closed in the past 6 months. Short sales staying on market about 86 days on average. Foreclosures staying on market about 49 days on average. As a percentage of available inventory, short sales are at 1.6%. Foreclosures as a percentage of the available inventory right now sitting at 2.8%. And as a percentage of what has closed in the past 6 months, short sales come in at 2.2%. Foreclosures coming in at 5.3%. So as you can see, foreclosures and short sales are not a dominant price point in the marketplace right now in Tampa Bay. Also, if you want these spreadsheets for your own review, I'm happy to send these over to you. Simply send me an email, jamie@tampabayradio.com. It's always good to help spread the word in the marketplace on what is going on, and I don't feel that I'm helping competition by doing this at all. I feel that I'm helping educate the competition, and so you can get this message out to the buyers. And again, this is geared specifically for real estate agents that are in Tampa Bay. So if you'd like to have these spreadsheets sent over to you, jamie@tampabayradio.com. And then again, down there at the bottom, you can see a graphical interface showing a pie chart of what we were talking about in terms of the spreadsheet above. Going to take a break. When we come back, we'll run through Pinellas, Pasco, and I'll see if we'll have time to touch on Polk and what is going on in the marketplace in a statistical standpoint. I do these reports once a month, and you can see how these have changed since I began doing the real estate edition of the program, going back over until April. So this is like the fourth time I've done this show. So you can compare the charts statistically through the months, and if you want the older charts, simply again email me, jamie@tampabayradio.com. Consider me your resource for buying or selling a home in Tampa Bay. I can work with you specifically. Thathomevaluation.com will get you a free home valuation. And if you're looking to purchase or lease a commercial property, I am also going to be able to help you out with that now moving forward in my business. You'll see more and more commercial real estate topics on this program as the business begins to develop into commercial real estate on top of foreclosure sales and regular real estate, which I can help you with also as well. You can also learn more about my real estate business and background, jamiemaloney.com. It's a separate site, different from thatbusinessnetwork.com, which is more real estate centric versus show specific. Again, jamiemaloney.com. So you're currently listening to the real estate edition of That Business Show 2.0 with your host, Jamie Maloney, where real estate becomes show business.
Hi, welcome to Yeager's. We just want to take a minute and show you what we're all about. At Yeager's, our primary business is hardwood flooring, although we are remodelers for kitchen, bath, and general construction. We operate a fleet of shop-at-home vans that have all the flooring type products, hardwood flooring, laminate flooring, tiles, stone, what have you. So we're able to come out first with products in our vehicles and take a look at the setting, how the colors will work, and then to be able to come up with some options and ideas for you. If that's not good enough, we have a large distribution center that we inventory product and have a nice display area.
Welcome back to the Real Estate Edition of That Business Show 2.0. I'm your host, Jamie Maloney, and new shows air for the Real Estate Edition Thursdays at 9 a.m. thatbusinessnetwork.com. Today I'm talking about statistics in the market. Actually, it's been a full show. We're talking about how the market is now the time to sell. The next couple of years is going to be a more distressed environment in terms of inventory, in terms of the interest rates, in terms of just the overall financial settings of our marketplace. So now is a good time to sell your home if you're thinking about selling anytime in the next 1 to 2 years. Review the first segment there if you're catching this on the latter half of the program. Pinellas County, let's see what's going on over in Pinellas County, our waterfront area of Tampa Bay. $0 to $150,000, we got 198 homes available for sale. $0 to $150,000 that have sold in the past 6 months, coming in at just under 1,300 homes. Averaging 39 days on market, months of supply coming in at less than 1 month, 0.92 months of inventory available. $150,000 to $300,000. We got 869 homes available for sale. $150,000 to $300,000 that have sold in the past 6 months, 3,600 homes. And those in that category are averaging 42 days on market with 1.44 months of supply of inventory. Also, something I don't talk a whole lot about on this program but are available. We talk about new listings, the repositioned and expired. When we say repositioned, we're talking about people that have reduced the price of their homes and properties that have expired over the past 60 days. And so new listings, repositioned homes, and expireds, those are also metrics that are available on this spreadsheet for review. 300,000 to 500,000, 663 homes are currently available for sale in our multiple listing service. Homes that have sold in the past 6 months in that price point, 1,328, giving an average days on market of 60 days and 3 months to the dot of inventory available for sale. Again, 6 months is that target that is considered to be a healthy marketplace. Again, coming in at just under, actually 50% of what it should be at 3 months. $750,000 to $1 million. Let's go over to that price point right there. 166 homes available for sale, 107 days on market on average. And here we see a more healthy marketplace at 8.3 months. But as I talked about in that first or third segment of the program, this price point not as lucrative or as should say supplied in Tampa Bay as other major metros. Although Pinellas County will have its more of its fair share of $1 million homes than Tampa Bay because it has beachfront stuff. It has more water access than Tampa Bay. Tampa Bay's only waterfront access is the bay itself, which really isn't any lucrative waterfront properties. There's bay shore, but the water views there from across the street, and so you don't have anything directly sitting on the water in Tampa. And I'm trying to think, make sure I haven't made it. There is some stuff down on the bay, down south of Gandy, where you'll have some stuff on the water, but it's not a big part of the market. And when you get down there, you get into the military air base, and it's not a highly desirable area like some other waterfront areas. Let's look at distressed inventory. Short sales, 31 available for sale in all of Pinellas County. Pinellas County is a very densely populated area, and to have just 31 short sales is kind of interesting. But also, again, Pinellas County is a different type of marketplace. Pinellas County built up in the 1950s. There wasn't a lot of people rushing into new homes during 2005, 2006. Much more established community, and so not as much movement going on as there was in Hillsborough and Pasco counties, which is where all the new development has been happening, and it's led to a lot more of the distressed inventory. Foreclosures, 54 available for sale in Pinellas County. Short sales that have sold in the past 6 months coming in at 108. Foreclosures, we've seen 357 sold in the past 6 months. 92 days on market is the average for short sales right now. 50 days on market is the average for foreclosures. Short sales as a percentage of the available inventory in Pinellas County coming in at 1.1%, and as a percentage of the available closed sales coming in at 1.5%. Foreclosures as a percentage of the available inventory coming in at 2%, and as a percentage of the available closed sales, just over 5%. Let's move over here to Pasco County and take a look at this. This is the development of Tampa Bay as it moves northward and into Pasco County, and will also push into Hernando County. A great place to buy and invest if you're looking for a cheaper price point, offering good proximity to a major metropolitan area. Pasco County is where you want to look. You're going to have lower insurance rates, you're going to have a lower tax base, and you're going to have a more rural setting, and with a close proximity 30 to 40 minutes outside of downtown Tampa. Consider Pasco County for your purchase, and a lot of development going on there. Give that place 10 or 20 years and it's going to look like central Tampa looks today, with much more densely populated areas. Up to $150,000, we've got 333 homes available for sale. 1,700 homes have closed in the past 6 months, up to $150,000 in Pasco County, giving us an average days on market of 44. Months of supply coming in at 1.15 months of supply. $150,000 to $300,000, got 876 homes available for sale. $150,000 to $300,000, 2,400 homes have sold in the past 6 months, and that's 2.2 months of supply of inventory. Averaging days on market, 55 days on market in that price point. $300,000 to $500,000. Looking at 604 homes available for sale. 782 have closed in the last 6 months. 70 days on market by average, and 4.6 months of supply of inventory. Once you get up above 500,000, less than 200 homes available in that marketplace, available for sale, and also less than 200 that have closed here in the last 6 months. Not a place for $1 million real estate. Pasco County not known for that. Short sales, 38 available for sale right now. 59 short foreclosures available for sale. 90 short sales have sold in the past 6 months. 391 foreclosures have sold in the past 6 months. Short sales, average days on market 123, and 54 for foreclosures. Short sales as a percentage of the available inventory at 1.9%. As a percentage of the available closed sales, 1.8%. Foreclosures as a percentage of the available inventory, just under 3%. Foreclosures as a percentage of the closed sales, 8%. So more foreclosures selling up there in Pasco County, and foreclosures are more prevalent up there because that's part of the development. A lot of new homes in that area, a lot of people being drawn to that area during this last major run up in housing. And let's look briefly over at Polk County, which is mostly Lakeland. That's the major city over in that area. 359 homes available for sale, up to $150,000. 1,500 homes have sold in the past 6 months, averaging 47 days on market, 1.4 months of inventory. 150,000 to 300,000, 1,478 homes available for sale, with 2,800 approximately selling in the past 6 months, averaging 71 days on market, with 3 months of supply of inventory. 300,000 to 500,000, 505 homes available for sale. 253 have sold in the past 6 months, averaging 102 days on market, with 12 months of supply of inventory. So you see in Lakeland quite a jump right there in that price point versus the rest of the Tampa Bay. So Lakeland is a small, big city. I joke a lot of times, coming from West Virginia, I moved to Lakeland when I was 18, and that was to me a major city. So I still think of Lakeland in some regards as a major city, but Lakeland really is just kind of a big town now by metropolitan standards. But when you grow up in a town of just 10,000 people, Lakeland, that's a pretty big area. Quite a cultural shift, by the way, and I've talked about that on the program before. Short sales, 37 available for sale, 59 foreclosures available for sale. 76 have sold in the past 6 months in the short sale category. 319 foreclosures have sold in the past 6 months. Short sales averaging 84 days on market and 48 days on market in the foreclosure category. Short sales as a percentage of the available inventory at 1.5%. As a percentage of the available closed sales, 1.6%. Foreclosures as a percentage of available inventory, just over 2.3%. And as a percentage of the available closed sales, coming in at 6.8%. And so those are the spreadsheets there, Hillsborough, Pinellas, Pasco, and Polk. Again, if you'd like copies of any of the spreadsheets, happy to send those out to you, whether you're a real estate agent whether you're a buyer or a seller. I know a lot of people out there like to look at the numbers. Some people probably cringe when I start talking about numbers, but I'd like to see the trends, because you hear a lot of talk, you hear a lot of people saying this and that, but when you put it on paper and in spreadsheets, numbers don't lie. It's the beauty about numbers. They don't lie. People can have their opinions and their thoughts and will say this and say that, but you ask them where they get that from and they'll say, well, I heard it from somebody else, and we all know how that works. So this is a way to break down the marketplace in Tampa Bay and educate your clients. If you're a real estate agent, take these to listing presentations and show them, what it takes, or what homes are selling for, and the inventory, and the homes that are being repositioned, homes that are expiring, and educate them on what is going on in the marketplace. And we do this program once a month on the Real Estate Edition, and we've got the past 4 months available for review, and so you can see the trends also from the other analyses that we have done going back to March or April when we started doing this. So thatbusinessnetwork.com. Underneath real estate, you can see the real estate videos there. And if you want the PDFs, or in this case, the Excel files, Jamie@TampaBayRadio.com. Again, Jamie@TampaBayRadio.com. Consider me for your next home purchase, or for your next home sale, or for that commercial real estate project or lease that you may be involved in. Jamie@TampaBayRadio.com. Use that homevaluation.com for a free home valuation as well, anywhere available in the country. Tune in to new episodes every Thursday, 9 a.m., thatbusinessnetwork.com. Find us on iTunes, and please leave a review, and please subscribe. Help the program grow, help other people's messages get heard through this program. Thatbusinessnetwork.com, available on iTunes. You've been listening to the Real Estate Edition of the program. And we'll catch you back here next Thursday at 9 a.m. on That Business Show 2.0, the Real Estate Edition, with your host, Jamie Maloney.